Hello, everybody. How we doing? Wow, that is tough. How we doing? Yes, thank you. Thank you. I appreciate that. All right, very excited to be joined by Usman from Coinbase. This is going to be hopefully a special conversation. Usman runs a lot of the derivatives business, all of the derivatives business, and a lot of the trading business at Coinbase. So, Usman, welcome, man.
Thank you. Good to be here.
Yeah, I think I would be very curious to hear maybe about just how you guys are thinking about derivatives in general. It is a highly, it's a part of crypto that has been more open internationally, less open in the US. You guys are starting to think about how you play more and more in derivatives. I'm just curious, the Coinbase derivative strategy.
Yeah, well, look, I think over the last 7 years, there's been a big shift in the crypto ecosystem where the vast majority of liquidity happens actually in derivatives and happens to, like you said, happen outside of the US. And a lot of that is because the rest of the world has been a bit more open to innovation. For a long time, we didn't kind of go into that part of the world and part of the product. But 18 to 24 months ago, we made the decision to launch the international exchange to really come into the world of derivatives. It was the first time I think we really had product market fit for outside of the US and a real product to tackle where 90% of the liquidity is. So it's derivatives as a whole is one of the core tenets of the firm's future goal. And Brian has gone on record many times to say that it's one of the top 3 things that the firm should be focusing on.
Derivatives are one of the top 3 things Coinbase should be focused on. Why is that?
Well, it's like I said, it's 90% of the global liquidity in crypto happens in derivatives. For every $1 you trade in spot, you typically see 8 to 9 in derivatives, in perps. And it's one of these things where Coinbase has spent 12 years developing a market-leading product in the spot market, especially in the US and amongst retail and institutions. But the derivative landscape is somewhere where we haven't really stepped into. So we're excited to be stepping into it for the last 18 months.
Do you think the derivatives volume for Coinbase will come from US institutions who you've got the trusted brand, you've got the name, you're a publicly traded company, or are you going to start picking away market share at some of the international players?
So I see it as a two-pronged approach. I mean, there's no reason why it has to be either or.
Right.
We have a US derivative offering, but we also have an international derivative offering for clients who qualify. And yeah, we're leaning in with our brand and the fact that we are very transparent and operate with the highest integrity, which means that for a lot of traditional financial players, they can face Coinbase. Right, they counterparty risk is a real thing for them, and Coinbase meets the hurdles that they have. And look, the international exchanges that have dominated the space over the last few years have done an amazing job. But there's clearly enough room for growth for another player to come in.
Yeah. How do you think about go-to-market with a derivatives business? Is it because you've got the makers and the takers, right? You've got institutional crowd, you've got retail crowd. What is the go-to-market strategy for a derivatives business?
Well, I find the marketplace, the go-to-market for a marketplace is very similar whether it's spot or derivatives, and it becomes a bit of a flywheel. So ultimately in crypto, the core is retail. Right? You really need to win the hearts of retail in order to really succeed. In order to do that, you need to have liquidity. So what we've been focusing on the first year or so of our existence on the derivative side is building up liquidity with market makers, bringing them onto the platform, making sure that we can provide deep enough order books and wide enough product set. And then we lead in with our retail space. So we've got a great brand. Internationally, we have a bit less awareness than we have within the US. So we've been really focusing on driving sales and marketing for the advanced trading platform, which is going to be key to really winning the international piece. And once you get that, then it becomes a flywheel where other market makers and liquidity providers come on because it's a more interesting flow to interact with.
So I had the Blockworks data team before this look at some of the volumes and stuff, at least from what we could find. And it looked like the platform so far, very high volume, very low open interest. What is that's tied to that dynamic?
Yeah,
okay.
Exactly. So Right now, the vast majority, or overwhelming majority of our activity is from high-frequency traders and market makers. And
The high-frequency traders, that drives a bunch of volume, but very low open interest.
correct,
Yeah, yeah.
exactly. Now that we're entering the next phase of our growth, where we're going to be targeting directional clients, both retail and institution, who have medium to longer-term duration, and that should drive the open interest.
How do you think about the initial group that I think about when you guys are launching this is kind of the big, oftentimes like the Asian exchanges, but there's also more on-chain players, like someone like Hyperliquid. Maybe people in this room use Hyperliquid. How do you think about Coinbase competing against someone more on-chain like a Hyperliquid?
Well, look, I think Hyperliquid have done a tremendous job with their product. Clearly have dominated market share in that sort of hybrid between SEX and DEX. I think I wouldn't directly put them as our direct competitor because we obviously focus on regulation, KYC. So a lot of institutions coming into the space need to have some confidence that the liquidity that they're interacting with is acceptable to them. So I think there's always going to be a space for what they do, and it doesn't directly compete with our product offering.
Liquidity is acceptable. Does that mean the liquidity is big enough, or liquidity is KYC'd and
The latter.
The latter.
Yes.
Okay. Is that? How do you? This is less of a Coinbase question, but how do you think about KYC in light of there's all this credit coming on chain and treasuries coming on chain and the big sticking point is KYC. So how do you think about like the growth of DeFi and on-chain products, but also you have to do this? I mean, KYC is the blocking factor here.
Yeah, and I know there's a delicate balancing act here between the principles of what cryptocurrency is about and bringing in TradFi assets onto the chain which need to be KYC'd. And ultimately, Coinbase is trying to bridge the gap between them. And I guess I'll pivot very slightly into the tokenization topic because this is kind of related.
Yeah, it is.
And the way I see it is, if I'm a financial institution and I have assets in real estate, in equities, in bonds, in rates, they're all separated out in liquidity-wise. And imagine a world where you can tokenize all of that into one aggregate liquidity pool, and then you can start either leveraging that or utilizing that as collateral, all in total rather than having segregated liquidity. So that's super important if you think about how big the non-crypto asset class is, which is basically everything, and bringing that on chain. So in order for that to happen, I think KYC is 100% necessary for what we need to do. So verified pools of liquidity I think is going to be a huge growth focus for the next couple of years. Yeah. And Coinbase is aiming to be right in the center of that.
Yeah. So Kraken just acquired this company called NinjaTrader.
Yeah.
I think $1.5 billion acquisition. So now Kraken, historically crypto exchange, can offer equities. So you're seeing crypto exchanges starting to offer equities. You're seeing equities brokerages like Robinhood starting to do more and more crypto stuff. How do you think about this kind of convergence of all these assets moving onto one platform?
Well, look, I think my overwhelming view is that a rising tide lifts all ships, right? More players come into the space and increase liquidity and increase users into the ecosystem, the better. I think we provide a very different offering to the more TradFi-focused people stepping into crypto. And I think there's space for everyone.
Yeah. Can we talk sentiment?
Yeah, sure.
What is the so a lot of us in this room, I think, have a very good access to maybe what the retail sentiment of the day is, but maybe less of a good access into the real institutional sentiment. Can you maybe walk us through when you're in the meetings with the big funds? What is the sentiment towards crypto right now?
It's actually been better than ever.
Let me change it. What is the sentiment towards assets beyond just Bitcoin and ETH?
That changes things. Yeah. I think institutions can make a very strong case for Bitcoin, and it's very clear that that's their first foray into the digital asset space, and actually that's been reflected in the recent price action, where even traditional financial assets and equities have had multiple standard deviation moves with the recent tariff announcements, whereas Bitcoin stayed pretty resilient. I think they view alts as a completely different segment. to Bitcoin, and they're yet to really dive into that. You obviously get the specialized institutions that focus on the alt tail, the crypto native firms. But in terms of traditional financial firms coming into the space, I think it's going to be some time before they go beyond Bitcoin and maybe ETH. But the crypto native firms have been enjoying the trading environment for the tail, but they've been really concentrated in the top 50.
Yeah. What are who becomes the biggest users on the platform? Like if you think about, I don't know, 24 months from now, is it the large crypto native funds, the liquid funds? Is it big macro? Is it big hedge funds who are now starting to open up a crypto desk? Is it the millenniums of the world? Who becomes the biggest traders on the platform?
Well, I do think it would be the TradFi firms coming into the space. A lot of them already look at crypto via whatever mechanism they can get involved in, such as IBIT, as a release valve for any macro geopolitical risk that they can access 24/7. Right, so they're already trying to embed it into their mandates. Now, if we can bridge the gap between traditional financial assets and digital assets, then I think they would be the biggest players in the space.
So we just had Samara Cohen on the podcast, on a Blockworks podcast. She's the CIO of BlackRock. And she talked about the entrance of non-emotional buyers into the industry.
Yeah.
So the last 10 years, all the buyers of crypto assets have been emotional buyers who somewhere in your personality, crypto's tied up, or you really believe in the mission or the vision or the ethos of the industry. And now with the ETFs and more institutional flow, you have very non-emotional buyers.
Yeah.
What does that do? And especially as you guys roll out derivatives, that brings in more and more and more non-emotional buyers. What does that do to price action, volatility? I'm using those specific metrics, but like general impact on market dynamics.
I think fundamentally it will reduce liquidity, volatility, and it will become a lot more tradable and a lot more sustainable. I think volumes will increase, and I mean, the Bitcoin itself has a very unique dynamic where it's a finite supply. So as more players come into the space, it's not like they can bring in more into the marketplace. So I think we'll see a lot more steady price action in Bitcoin, and I think some of that will flow down into the other alts as well, where we'll have a lot more stability and probably a bit less of idiosyncratic moves happening in the space.
Do you think we've seen the end of the 4-year cycle?
I think that the 4-year cycle is something that happened in the past, and I think going forward, we're going to have much more elongated windows.
Yeah, I tend to agree with that. So I walked in at registration and the Coinbase advanced signs were all over.
Yeah. That's the product manager for advanced trading.
Let's go, product guy at Coinbase. Let's go. And then you guys also had a presence at Token in Singapore.
Yes. Yeah.
I know you guys don't have a big presence, marketing and stuff like that, at a lot of the U.S. conferences. Like I don't see it at DAS or ETH Denver, things like that. What is why is that? Is it because the folks who trade derivatives are here? Is it like what?
Well, it's not entirely intentional. I mean, in the US we have a strong presence. I think you could probably, I imagine you agree with me if I say that anyone in the US that has entered into crypto has at some point opened up a Coinbase account.
True.
Right. So the awareness problem is a lot lower in the US than it is outside of the US.
Yeah.
And outside of the US, Coinbase Inc. is known, the actual Coinbase brand is known, but I think what we're aiming for is really driving awareness of the advanced trading product. That Coinbase is not just a platform where you can on-ramp and off-ramp and just buy your first Bitcoin, but it's actually where serious traders can come in and actually deploy capital and risk manage and do a lot more than just buy and sell.
Yeah. Do you think the U.S. is moving quickly enough on regulations?
I think
specifically for perps and derivatives and things like that.
Yeah, look, I think we're at the dawn of a new era, right? I think looking back, the US has stifled innovation for very obvious reasons, very public reasons. But I think now the US is really moving fast, and if they can keep this momentum up, the rest of the world is going to have to catch up. And I really think the US is really leading the charge. And actually, you're seeing Western governments like the UK or with their stablecoin guidance and Europe with their MiCA guidance, really trying to step up and catch up with what the US is providing in terms of regulatory clarity.
What do they, if you snap your fingers, you have anything in the world, you get the regulators to approve something, what does that actually look like? Like, what are you waiting for them to do? in the US?
In the US, we're just waiting for full support of the asset class amongst TradFi clients, essentially. I think that would be the big pivotal movement where it's people aren't worried about using their mandate to come into digital assets, and they don't have to raise separate funds for digital assets. If they can incorporate that in their current macro mandate, then I think that would be a game changer.
Yeah. So the other interesting thing I've picked up from this conference is all of the big Asian exchanges are looking to enter the US. So while you guys are looking to go more international, Bybit and OKX and Binance are all looking to do something in the US. What do you think is going to happen with that strategy? Do you think they'll be successful?
I think we welcome anyone to come into the US. The more people that come in, like I said, rising tide lifts all ships. I think
it's a very comms friendly.
To be clear, I think our US strategy has not slowed down.
Yeah.
It's just that we have a lot of muscle in the US. So I think we're very confident in what we're doing in the US, and we're going to continue doing that. That isn't slowing down in any way. It's just it looks like we're focusing heavily on the international side because we're going essentially from zero to where we're going.
Whereas you already have your market share in the US is probably 75% already, or more. Yeah. What is we have a couple minutes left here. What is something that the room maybe doesn't know about how the derivatives market or the perps market or whatever works in crypto? What is something, maybe you can teach us a little something about really kind of the underbelly of how this part of the market really works?
Well, I think the biggest change we see from people coming for the first time into perps is really being blown away at the liquidity, right? Like I would not, and like if you trade spot and you've never traded perps, just give it a try. Like it's phenomenal how much liquidity you can access, and I think the opportunities that the funding models provide are quite compelling because you can do things like basis trading and actually get paid to go long in some cases. So I think really understanding the funding dynamics and how much liquidity you can access using perps is something that everyone should explore.
Yeah, it's a good product.
Yeah, it's great.
Good product.
Great innovation.
Yeah, it is. It is. All right, as we think about wrapping this up, take me forward. So it's mid-2025 right now. If it's like a year and a half from now, you guys have been able to accomplish all of your wildest dreams. What does that actually look like? Who are the customers? What does the product look like? What's the market penetration?
Well, I mean, we want to be dominating the global market for crypto and derivatives, full stop. However that looks like. But in terms of clients, we want to make sure that every serious retail trader is using Coinbase. So we want to make sure that every institution, whether market maker or non-market maker, is accessing liquidity via Coinbase, whether that be for spot or for derivatives, whether in the US or outside of the US. And we want them to be able to utilize the whole platform for their mandate. And I mean, we're focusing on three main pillars. We want to making sure we come up with all the possible listings to provide the assets that they can trade. We want to make the whole platform capital efficient for both retail and institutions so they can get the best bang for buck. And then we also want to increase the top of the funnel. Make it easier to access Coinbase. If you're an institution, you can be plugged in via different brokers. If you're retail in certain countries and you're familiar with the local broker, you can access it via them. So essentially being the real infrastructure in the backbone of the crypto economy.
Listings, capital efficiency, top of funnel?
Yep.
Awesome. Usman, thank you very much. Thank you, everybody. Appreciate the time.
Thank you.